Much like we saw with Southwest and American earlier today, they are beating the street. Alaska Air is, for the third quarter, coming in well above expectations, earning $2.63 a share in the third quarter. The estimate was for $2.52 a share. Revenue coming in slightly above expectations at $2.39 billion. And its revenue per available seat mile, that's a key metric to focus on. It's slightly higher than the previous guidance from the company, up 4.5%. Previously, they guided for an increase of 4.4%. Guys, I know you're going to be talking to Brad Tilden in a few minutes. I would be curious what he has to say about the situation with the 737 MAX. In particular, you know, they have some on order. They haven't been affected so far. There are none that they're flying so far, but it has been part of their plan for the second half of 2019 going into 2020.
Phil, that is the perfect lead-in. Thank you for bringing us those numbers. For more on the results, let's bring in Alaska Air CEO Brad Tilden, who joins us now by phone. Brad, thanks for being with us. And let's start right there. The 737 MAX, as Phil just mentioned, you don't have those in your fleet, but you did have them on order. How closely you're watching the situation, and what does that mean for those future orders?
We're watching it super closely. We did not have any MAXs in our fleet at the time they were grounded, but we should have had 3 delivered by now. We've got 7 or 8 coming next year, so we're watching it very closely, just like everybody else.
Well, talk us through this quarter's numbers, Brad. Clearly, the share price slipping a little bit, despite a good quarter backwards looking. Are you giving out some guidance that might be a little soft?
No, I'm not sure what I'm not sure what you're seeing, but we actually felt really, really good about the quarter, and we felt good about our guidance going forward. Our RASM was up 4.5%. We think that'll lead the industry, and our margin, pre-tax margin, was 17.6%, almost 18%. We think that will lead the industry, and we're actually feeling quite good about our network, about our revenue production, and my own sense is that our guidance was going forward was fairly positive.
And Brad, just to dig into the revenue per available seat mile, the RASM numbers a little bit more, what is driving that? And I guess based on that, what is your read-through on the state of the consumer right now?
I think, as you guys know, we were bought Virgin America. That sort of gets you focused on that stuff, but that's behind us now. So our commercial team is just doing an amazing job. I think what drove the unit revenue improvement is network redeployments, getting the right airplanes in the right market. We're doing some things with the fares, particularly with the first-class cabin and premium economy. We've rolled out saver fares, which has been hugely beneficial. And so those are some of the primary drivers.
Brad, talk us through ending the partnership with American in terms of code shares and alliance points.
Yeah, you know, these things move around a little bit from time to time. What's happened is Alaska, we've grown 7% a year for the last 20 years, and we've grown more than that for the last 5 years. And so you start without much overlap with these partners, and then you end up having a lot of overlap, and so people see the value equation differently. We don't see much, if any, impact from the loss. Honestly, it was 3% of our mileage plan awards were on American metal, and at this point of our route network, where our customers are going, we have 90% ability to serve them ourselves. So and candidly, while we had the American relationship with American, it had sort of dwindled down even inside the relationship. So we see the impact as pretty minor going forward.